Hey guys, welcome back to my weekly options video series where I'll be sharing with you my options trading game plan for the upcoming week. If you're new to my channel, I post my game plan videos every Sunday, so be sure to subscribe to my channel if you don't want to miss any of the trading opportunities that I'll be sharing. Once again, if you're new to trading options, I would definitely recommend you to start paper trading using the Thinkorswim platform first. I hope you'll find today's video useful. As usual, I'll start off with a quick recap of the trading opportunities I talked about in my last video, so let's get started. So just a quick market update. If you take a look at the charts of the S&P 500, you can see that as of Friday's close, prices are still pretty much flat versus the prior week. We did see some action on Thursday where prices gapped up before the market opened and hit an all-time high. But on Friday, prices came back down again, so pretty much a flat week, I would say. So this week we had quite a number of big tech earnings released. So in general, I would say that most of them actually beat market expectations. But unfortunately for some of them, even though they beat market expectations, prices of the stock actually came down. Microsoft is actually one of them. Apple is also one of them. So pretty much a range-bound week, I would say. I did mention that last week I was expecting so-called a pullback or retracement, but we didn't see it this week, so prices continue to hold. At some point in time, I actually do expect the price to actually retrace back maybe to the 20-day moving average, but we shall see what happens in the next week. So coming back to my Excel spreadsheet, if you recall in last week's video, I did mention that I had two outstanding positions for Apple. So one of the diagonal spread that I opened on the 29th of March, I've already wrote the short call once, and I opened another diagonal spread position on Apple on the 20th of April, and this was purely an earnings speculative play. So Apple actually released their earnings on the 28th of April after market hours, and the earnings was pretty good, I would say, beating market expectations. So on the 29th of April, before the market opened, prices of Apple actually kept up by close to 2%. So immediately when the market opened, I actually took profit on both my positions and closed it for a decent profit. And that turned out to be a very wise choice because after that, the price of Apple actually kept back down. So I would say that it has been a very good run for Apple. So my total profit for Apple is close to almost 3,000. So this has been a very good month for the month of April based on all the opportunities that I've shared on my channel. I made a profit of close to $10,700, a very good run for April, I would say. So hopefully for those who have been following my channel, you have benefited from some of these opportunities that I've shared as well. So moving on to my remaining open positions, for Nike, not much action this week. My short call is actually expiring on the 7th of May, so no action required, and prices have been pretty much range bound. So for Zoom, I actually rolled my short call. It was expiring on the 30th of April, so I rolled it to the 14th of May. Prices are still pretty much range bound, I would say. Last week's video, you actually saw that the P&L was positive, but now it has turned negative already because prices actually came down quite a bit versus the prior week. Same thing for Disney. My short call was actually expiring on the 30th of April, and I rolled it to the contract that was expiring on the 14th of May, strike price of $190 as well. And right now it's still showing a negative P&L. Prices are still pretty much range bound for this week as well. Same thing for Plantier. My short call contract was actually expiring on the 30th of April. I rolled it 2 weeks out to the contract on the 14th of May, strike price of 26, and now Plantier is showing pretty much a positive P&L. So hopefully for Zoom, Disney, and Plantier and Nike, prices will move in a range-bound manner, and I can continue to roll my short call for a decent profit. So if you recall in last week's video, I did mention that if there was a bullish signal on CRM or Salesforce, I will likely enter a diagonal spread position as well. So I actually did enter a position on the 27th of April for a debit of $35.57. I entered a total of one contract. So my short call is expiring on the 7th of May, strike price of $245. And in my last video, I did mention that why I selected the $245 strike price. My long call is actually expiring on the 16th of July, strike price of $200. So as of now, you can see that the P&L is slightly negative, but that's pretty much within expectations. So I did mention in my previous video that if prices break below the 100-day or 150-day moving average, I will likely cut loss for the trade. So otherwise, I will continue to roll my short call position. So that's pretty much my outstanding positions for this week. Let's move on to the opportunities for next week. Moving on to the opportunities for next week, not much opportunities I would say. So there's one particular stock that I'm looking at very closely. That would be Johnson & Johnson, ticker symbol J&J. So if you look at the charts of Johnson & Johnson, you can see that prices have been pretty much hovering around the 50-day moving average and the 20-day moving average. The uptrend is still pretty much intact. As of Friday's close, you can see that prices have closed down a bit and is close to the 50-day moving average again. So next week, if there is a bullish signal, I will likely also enter a diagonal spread position for this. So my short call for the diagonal spread is likely going to be at the resistance level, which is around the $166 price level. So if prices break below the 100-day moving average, which is the line in yellow, or if it hits 50% of my max loss for the trade, I will likely exit this position. So, but I do expect the prices to be hovering around this 50-day and 20-day moving average. So earlier on, I mentioned that I was expecting some form of pullback or correction in the stock market over the next couple of weeks because prices have pretty much moved up quite quickly in the last month. So moving forward, I will likely not take on any additional diagonal spread positions, just to be on the safe side. I already have quite a number of diagonal spread positions. So other than this Johnson & Johnson opportunity I mentioned, I will likely not take on any additional diagonal spread position, so that I can keep my portfolio balanced just in case there's a retracement or correction. I don't want my portfolio to get hit hard. So another strategy which I employ pretty often would be selling cash secured puts. So typically when the market corrects or when there's a retracement, the volatility will spike and I want to take advantage of that. So I will start selling cash secured puts. But I only do this on fundamentally good stocks that I want to own and invest for the long term. This is a pretty capital intensive strategy, I would say. So, but I only do it on the stocks or the companies which are fundamentally good and decent, and I really want to hold them for the long term. So if there's a major retracement in the market, I will likely post a video on some of the stocks that I have in my watch list where I intend to sell cash secured puts on them. So that's pretty much my trading plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comment section below and I'll try my best to answer them. If you're new to my channel and enjoyed watching this video, be sure to subscribe as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading and thanks for watching.